The three large private life insurance companies have seen their stocks rallying by 70 to 100% from their 52-week low prices seen in March 2020. But the financial performance of all these life insurance companies was tepid in the Q1 of FY21 as their business was impacted by the pandemic. In our Ideas for Profit today, I'll discuss which life insurance stock offers better value for investors. Well, life insurers provide cover against mortality and morbidity risks and also offer savings products. Now, in the last 5 years, the industry has focused more on pure protection products, that's term assurance and annuity segment, margins for which are relatively high in the protection business, and the segment also offers enormous growth potential. Now, India has a protection deficit at 92% as per estimates by Swiss Re, implying that every US dollars of 100 needed for protection, only $8 is spent by a typical Indian household, leaving a massive mortality protection gap, and this represents a huge opportunity. Now, the leading private life insurers are set to see acceleration in profitability metrics such as improvement in new business margins driven by higher protection business, lower expenses and better persistency in the next couple of years. So, given the promising sector outlook, which life insurance company's stock is worthy of investment at this juncture? Well, let's briefly look at the Q1 FY21 earnings of ICICI Pru Life, HDFC Life and SBI Life Insurance. All three players saw sharp decline in the total annualized premium equivalent or APE, which is a measure of ascertaining business sales in the life insurance industry. Now, while the decline was steep in April and May, June was relatively better with the gradual lifting of the lockdown restrictions. Now, the decline was led by savings business as ULIP sales decelerated this time around. Now, life insurers' capacity to underwrite the protection business was definitely affected by the limited physical contact with customers and also difficulty in undergoing the medical checks. However, ICICI Pru fared relatively better here. Consequently, ICICI Pru saw share of high margin protection business improving from 15% a year ago to 26% in Q1 FY21. Now, for HDFC Life, the healthy growth in individual protection was offset by decline in group protection. Now, while all players saw decline in absolute value of new business, we are particularly enthused by ICICI Pru's performance. Now, ICICI Prudential's improvement in business mix in favor of a high margin protection business yielded results and margins also improved. Now, cost ratios improved for all. SBI Life stands out with the lowest cost to premium ratio over here. Now, we had suggested ICICI Pru over HDFC Life after the Q4 earnings. Since then, ICICI Pru has rallied 21%, but still it has underperformed HDFC Life, which rallied up to 28%. ICICI Pru stock is currently trading at 2.8 times the trailing price to embedded book, which is a significant discount to HDFC Life as well. Now, HDFC Life is trading at 6 times the trailing price to embedded value, which is a significant premium to all its peers. Now, while the stock is a long-term compounder, the rich valuations limit significant stock price upside in the near term for HDFC Life. Now, SBI Life, in our view, is well positioned for growth in the insurance space given the best class distribution network of the parent SBI, lowest cost ratios and improving product mix as well. But ICICI Pru remains the topmost pick in the space for the cheapest relative valuation and also offers upside to the current stock price.